Hello and welcome to What Keeps You Awake.tv. I'm your host, David Hooser, and we're here once again with Mark Briden to talk further about the topic of funding. And specifically today, let's talk a little bit more on the risks and then get into the sources of that funding. Mark?
Thanks, Dave.
What happens when, because we all know if you file a bankruptcy, it stays with you on a personal basis. What happens when your business files bankruptcy?
Well, there's two different types, a liquidation and a reorganization. Right. So Chapter 7, Chapter 11. So typically when I was involved in a bankruptcy, I would either sell off the assets, the hard assets of the organization, and the lender kind of controls the majority, not controls, but has a lot of input on that. And that's in a wind down scenario, effectively, where they want out, they want paid back.
Right.
So you could either sell off the good pieces of the business, customer lists, your AR, your inventory, your real estate, whatever the case is. If it's a reorganization, typically you would need to go get exit financing, DIP financing, debtor in possession financing, and most of the time you will take out that lender, probably at a discount, and the new lender will come in. They'll act as the current, they everything has to be run through their
books,
approvals, and the court system obviously ultimately gets the final yes or no or approval. You might have a creditors committee, depending on how much and how many creditors are involved, non-secured creditors. So there's a lot of different nuances behind that, and we could talk about that for hours and hours.
That's a topic unto itself.
But in general, though, you never want to file bankruptcy. You always want to work it out with your lender, hire a restructuring or turnaround consultant, which is what I did for numerous years back in my day.
Turning around. So that when you say turnaround, that's what these guys are like at the door. They're gonna, go under. You're gonna try it. So you stop. You try to.
Yeah, you try to do a before you even go into bankruptcy. You hire a restructuring guy, turnaround guy, and then you get into a forbearance agreement, typically with your lender. The lender puts a pause on all aspects of essentially liquidating and taking possession of your collateral. So you have those negotiations. They trust the turnaround guy. There might be fighting between the borrower and the lender. Therefore, a third party is typically good to bring in to help with that scenario or situation. And then does it impact you overall? Yeah, every lender asks, right? Have you filed bankruptcy, or has your company filed bankruptcy in the last 7 years? If you have, obviously it's more difficult to get traditional financing. Hence the reason why you have to go to alternative lenders. And there's numerous alternative lenders out there.
Let's talk about sources then for a minute, the different types. So obviously, if you're clean, you have revenues, you can show those revenues, you have clean books, which a lot of small businesses, they have a ledger, but not really, and they're not looking specifically at balance sheet type items. They're just looking at, cash in and cash out often. So having good clean books. Everything looks good. You can find lending from more traditional sources with competitive rates.
Small business lenders or the SBA is always a good option. Those are typically $5 million or lower in terms of loan size.
Okay.
So whether it's a purchase of a business or recapitalizing it or using it for like a commercial loan, which is related to cash flows of the business, and that's always a great option. SBA is one of the largest lenders in the country, right? So, I would start with SBA. If you're looking for more of a asset-based loan, again, related to receivables or inventory, that's a different approach. If you're looking for equipment loans, there's very specific equipment lenders out there.
Right.
They'll give you 80, 85% sometimes loan to value. So you still have to come up with that delta there for a downstroke of your equity. Commercial loans, which is more of like a cash flow loan, making sure your business is generating a certain amount of cash flow to pay the principal and interest. So yeah, there's a whole lot of opportunities out there for small businesses.
I know I get emails every day and voice messages saying, "Hey, you just got pre-approved for
$250,000. It'll take 5 days.
Give me a call.
Yep.
Money's waiting. It's got your name on it."
Yep.
So
I mean, those are small loan broker shops, right? And they might be tapping into the SBA program or some other source. But yeah, those are opportunities, right? Just trust your broker, trust the guy that you're working with. Typically, I like to, talk to my, well, I am a CPA, but I would talk to yourself, talk to your CPA, look into them, do some due diligence, try to understand what happens in the worst case scenario, meaning what happens if I miss a loan payment or 2 or 3, have a downsize in my business. What happens then? How do they handle it? Talk to some customers that have worked with these lenders in the past, but overall, the business owner is going to be involved from soup to nuts, right? And it does take some guts to enter into one of these transactions, just because it's,
you're putting your baby at risk.
Yeah, a little risk.
All right, well, good. Well, I want to close it with 2 quick, opportunities. We'll say, if there's any kind of, golden nugget of advice that you could give to, our listeners on that topic, and number 1, and number 2, if you have what I call a shameless plug on your business, we'd love to hear more and let everyone know, how to find you online.
Yeah. Ultimately, get some great people around you that'll help you. You don't have to pay most of these people. Most of the business organization is here to help small business owners.
Yeah.
So join some organizations, start going to networking events in your area. You'll start to meet great people, bankers, CPAs, attorneys, and then you'll start to have a nice niche group of individuals you can always reach out to.
Kind of advisor network,
and they'll help you. Most people do it because they like to do it. If there's an opportunity, of course, for them to help you with your books and taxes and all that, of course, they're going to want to charge for services.
Sure.
But
which you should gladly pay, because you're getting value.
Absolutely, right? Or get you a loan, right? And get you the best rates. And it does cost a little bit of money up front, but typically it comes out of the loan proceeds. So be around trusted people, go to these networking events, find a bunch of organizations that are deep into your city or your town, right? And
I would say firm, follow what keeps you awake.tv, so you see more episodes from important and smart people like Mark. So how about a plug?
So our firm is 360advisor.com. It's the number 3 and then 60advisor.com.
Okay. We'll put that up on
we do taxes, bookkeeping, we do financing, we do health insurance, general liability insurance for your business, whether it's real estate or pretty much all aspects of office of the CFO. So typically small business owners, they have 5 or 6 different trusted advisors, right? They're different brokers, they're bankers, they're attorneys, they're CPAs. We try to bring that into one house to act as your trusted advisor, all within one organization.
All rolled into one. Great idea.
So you can get your health insurance through us. your traditional insurance for your business,
E&O if you need it.
E&O, D&O, property insurance, property and casualty insurance, and then your tax returns. We help with cost segregation studies when individuals buy their investment properties and they want to take advantage of some tax deductions and tax savings. So we help with that, tax planning. Ultimately, we're here to help a small business owner succeed, and that's what we do for a living here.
So we have to thank you in advance for letting us grab Ron Whaley, who's coming on a future episode to talk a little bit about legacy planning. So again, we're in this for a reason. Why we're building, value in our businesses. Then what do? If we reach our goals,
you sell it or you pass it along.
We need to have a plan.
You need to have a plan.
All right, guys. Thanks for tuning into this podcast episode. We'll see you on a future What Keeps You Awake.tv. And don't forget, follow or subscribe to our show. Thanks.
Thank you.